Tesla generated $16.9 billion in revenue in the second quarter of the year, despite the lockdown and inflation crises. And investment expert Ross Gerber believes that the quarter represents Tesla's prospects to increase production even in the downtime. The long-term Tesla bull believes that Tesla is not only the most exciting and innovative company in the world, but is also one of the companies with the most opportunities. In his own words, he described Tesla as the king, with over 12% allocation in his fund. Hey guys, welcome back to Everything Tesla Stock. Tesla is already in a dominant position, with the highest profit margin in the whole automotive industry. The car company made $53.8 billion in revenue and $6.5 billion in operating income in 2021. This is way above the value recorded by companies like Ford and Rivian, who are its major competitors in the industry. CEO of Gerber Kawasaki Wealth and investment manager Ross Gerber believes that Tesla is well positioned to utilize several opportunities that are available to it, far better than any other electric car company out there. This is very true considering that the automaker has an even higher profit margin that qualifies it for these market opportunities, and will most likely have more. So why does Ross Gerber think Tesla is unbeatable in the EV industry? And just how bullish is this Tesla stock investor? Well, we're going to talk about it more in this video, but before we get into it, don't forget to like, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. In a recent video, Ross Gerber revealed that he has grown more bullish on Tesla, and now has more epiphanies about the car company than ever. He attributed this to several factors, like climate change-related investments led by Tesla, which he believes can potentially drive the car company's profit margin and lower its production cost. According to Gerber, Tesla's move to start producing more batteries in the US followed the new Inflation Reduction Act, and it's one of the major projects that could drive its growth. Tesla plans to stop building the battery part of its Gigafactory in Berlin and move it to the US instead. This is coming after the US government announced a $7,500 tax credit for electric vehicles that requires portions of critical battery materials to be extracted or processed in the US. Gerber thinks that although Tesla's Fremont and Texas facility can help facilitate its car production in the country, adding a battery facility will give it an edge on getting the announced tax credit. But what does this mean for Tesla and its investors? Keep watching to find out. With battery production up in the United States, Tesla can increase car production and lower costs using the tax credit. Tesla already has the highest leverage to reduce costs in the industry, and has the potential to keep doing so. Tesla's production cost will reduce as the automaker continues to roll out more cars, irrespective of what is happening in the marketplace. According to Gerber, the tax credit can reduce Tesla's cost per car, which is going to lower the car's prices and then further drive profits for the company. Tesla is already on record high profit margins, so battery incentives could just be the icing on the cake. The Inflation Reduction Act is also stated to access the credits. By 2026, vehicles will need 80% of critical materials sourced domestically or from a country which the United States has a free trade agreement. And this is one area that Tesla is already exploring. The car company has, in the last few months, disclosed plans to invest in mining raw materials like lithium and nickel. And if Tesla is able to do this, it can further place it in a position to get the tax credit. Gerber also stated that Tesla's supercharging network is one of the catalysts to achieving high profit margins, especially since the car company is planning to open its charging capabilities to non-Tesla owners. Earlier this year, the carmaker disclosed that it's working on a new supercharger membership to offer non-Tesla EV owners a chance to use its network in the United States. According to the news, Tesla is preparing to open the network in North America by introducing a new CCS adapter for non-Tesla EV owners, and the move is expected to happen by the end of the year. Tesla shared its membership plans on its app, with a pay-per-use plan and a membership plan priced at 99 cents a month. Although Tesla soon after removed this option from the app, the information gave Tesla bulls a conviction that the company is still on plans to expand its supercharging network. Also, Gerber revealed his optimism about the US subsidies for charging stations, adding that although he is not sure if Tesla has received these subsidies, he believes that the car company will. In February of this year, the Biden administration unveiled its plan to award nearly $5 billion over 5 years to build thousands of EV charging stations. This was done in a bid to encourage Americans to move away from gas-powered cars. According to the news, the government wants 50% of all new vehicles sold to be electric or plug-in hybrid models, and 500,000 new EV charging stations installed by the year 2030. Likewise, a recent research done by Austin Vernon and Eli Dorado claimed that the era of energy abundance is expected, a time in the future when energy is so clean and plentiful that limiting consumption would be entirely unnecessary. Gerber believes that if this time of energy superabundance does happen, it could allow Tesla to provide supercharging services at almost no cost, while raking in enormous profit from them. Tesla already has the fastest supercharging network in the world, and it's definitely going to grow bigger from this. Gerber believes that the network could actually be worth $20 billion, $30 billion, or even more, but it is also not fully estimated what Tesla's supercharging network is actually worth. Several stock analysts, though, are beginning to consider this factor in their evaluation of Tesla. Also, since Tesla has already clearly dominated the supercharger network, it could be expected that other EV companies may at some point partner up with Tesla to provide supercharging services for their electric cars, just as they are likely to leverage Tesla's autonomous software in the future. Tesla is gradually becoming the only rated supercharging network, and will eventually be when it opens up this facility to non-Tesla EV owners, allowing those on road trips to travel longer distances to easily charge their cars. This will not only facilitate Tesla's goal towards cleaner energy, but it's also going to contribute significantly to Tesla's valuation. While speaking on the Cybertruck, Ross Gerber stated that this is an innovation that will be widely accepted by a lot of people, adding that although Ford and Rivian have gone ahead of Tesla in releasing their own truck models, the Cybertruck will take over eventually. He said, "I've become widespread in love with Cybertrucks, and I'm now fully convinced that electric vehicles will be adopted by truck drivers, and they love electric vehicles too." At the time the Cybertruck was announced, most people didn't fully accept the technology, but things do seem to be changing. Gerber stated that the truck business is the next big thing, and the Cybertruck, which is hopefully launching next year, is going to be a huge moment in Tesla's new foray into the trucking business, followed by the semi-truck, and there are several reasons to believe this. One of those major factors may be that the slowing down of the release schedule of the Cybertruck is because of its 4680 battery cells. Back in 2020, Tesla unveiled these, and they said that they'd enable the production of cheaper and more long-range electric cars. These cells were expected to power all future electric vehicles, including the Cybertruck. Tesla earlier this year announced that it received 4680 battery cell samples from Panasonic ahead of the manufacturing giant moving to mass production of the new battery, and it seems production has started, although not on a very large scale. Well, speaking of these battery cells, Gerber said they are going to get into the works, and it's going to be a game changer for Tesla. It's not the first time that Gerber's shared optimism about the 4680 battery cells. The investment expert once said that the 4680 cell project is the most consequential thing that Tesla has ever done in battery technology in a long time. He also said that this type of battery cell can help Tesla make EVs that are 7 times better than regular cars. The Tesla bull believes that Tesla's valuation is not only based on its cars, but several other innovations, all of which make up its stock value. Although as other electric vehicles continue to come up in the industry, it is fair to say that Tesla may record lower sales and profit margins, but considering that these EV companies do not have as much cost advantage as Tesla, this could be pretty difficult. Tesla are already going into almost all the important parts of the transition to sustainable energy, so it will take a lot more to beat that. According to Gerber, there are risks involved and the possibility of something going wrong. These risks are what make Tesla incredibly good. Do you agree with Gerber? Can Tesla continue to increase its profit margin? Let us know down below in the comments, and don't forget to tell us what your valuation of Tesla is. If you'd like to know more about what Tesla's been up to, go ahead and click on this next video on your screen. See you there.